New tax brackets announced for 2024. Are we seeing big changes? I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Here in the United States, we have the most complicated tax system on the planet. Congrats to us. It is wildly complicated and very difficult to sort out, but our tax rates and tax brackets and system, it's called a progressive tax system. And that's not a political term. It really is meant to represent that the tax rate that is applied to your income is progressive. It progresses, it increases as your income increases. And what that means is we've got tax brackets that are applied to each rate, and if your overall taxable income lands in this bracket, okay, then it will be assessed at that rate. But if your income goes up, you'll still be paying tax at the 10% bracket, and then whatever lands in the 12%, you'll pay tax at that level, and then anything lands in 22, you'll pay tax at that level as well. So it doesn't mean, well, if you're in the 22% tax bracket, then all of your income is taxed at 22%. No, it's progressive. You'll pay a chunk at 10, a chunk at 12, and then the remaining chunk at 22, or 24, or whatever it is for you. So that's the progressive tax system. Using words alone, I probably didn't communicate that well, but that's a question we get often. So every year, the IRS looks and adjusts those brackets, sort of the accordion, okay? So how much income can you have after deductions that's going to be taxed at 10% or 12% or whatever? And note, tax rates are different than tax brackets. Tax rates have not changed. They are not changing for 2024. And unless, things change, the current tax rates will sunset in 2026 and will revert back to where they were in 2016, 2017. Right now, the tax rates are staying the same, 10%, 12%, 22%, 24%, and so on. It's just the brackets, the amount of income you can have that is going to be taxed at those lower levels. And IRS updated the new numbers, the new tax brackets for 2024. Let's get into it. So the brackets expanded approximately 5.4%, which means there's about 5.4% more income that you can have and still be taxed in the 10% bracket, or still be taxed in the 12% tax bracket. Take a look at this grid here that shows for 2024 what those new tax brackets are going to be for single, married filing jointly, and then head of household. So I'm going to focus on the married column. So all of your income and all of your sources, so interest income, dividends, wages, and all that, but minus deductions like 401k or health, HSA, those sorts of things, but also minus standard deduction. I'll get to that update here in a second. That gets you down to your taxable income. The first $23,200 is going to be taxed at 10%. From $23,200 up to $94,300 is taxed at 12%. From $94,000 up to $201,000, and I'm rounding here, is at the 22% tax bracket. 24% then starts at that $201,000 and goes all the way up to $384,000, and so on. You can see how those brackets expand. Now, if you were to compare that to 2023 or even 2022, yeah, that's a meaningful amount. That's a meaningful amount that is now going to be taxed at 10% or taxed at 12%. And I think more and more people will find themselves, especially in retirement, staying within that 10% or 12% bracket. For example, last year, married filing jointly, or for 2023, I guess this year when you file your taxes in the spring, the 10% tax bracket went up to income of $22,000, and then the 12% went from $22,000 to $89,400. The 22% bracket went from $89,000 to $190,000, and then the 24 from $190,000 to $364. So you can see this is a pretty big increase. And just 2 years ago, I'll just say this, the 12% tax bracket went up to $83,000. Now for 2024, it's surpassing $93,000. So that's a big increase. And guys, numbers are confusing. I get that. And so what does this mean? You can earn more money and have it be taxed at lower rates. That's essentially what this means. This is ultimately good news that there was approximately a 5.4% expansion in these tax brackets. You can earn more money and have it taxed at lower brackets. Now, what's the action item for you? It's very possible you've looked and said, I need the tax deduction because I want to get out of the 22% tax bracket, make sure I stay within the 12. Well, now that they're expanding these brackets, it's possible you stay within that 12% tax bracket automatically, and instead of funding pre-tax, you should be funding Roth. Or maybe if you're in retirement or early retirement, you're doing Roth conversions, you may be able to convert more dollars in the 10% or 12% tax bracket. So guys, I know it's sort of minor, but this influences your tax planning and your tax strategy. So be aware of these brackets. Ultimately good news for 2024. Work with your CFP to see how this influences your planning and what adjustments you should make. All right, and then for the standard deduction, most people no longer itemize over 90%. I've heard take the standard deduction. You can list out all your itemized expenses. And if that's higher than the standard deduction, then great, you'll take that. But for most people, the standard deduction is higher, and it's only getting higher still. It's $29,200 for 2024. That's an increase off of $27,707. This is married filing jointly for 2023, moving to 2024. So that's a significant amount. There is still, I'm not sure when you're seeing this, at the time I'm recording, it hasn't been passed yet, a bill that's aiming to increase this a couple $1,000s for tax years 2024 and 2025, an increase to the standard deduction, also trying to rename it to the guaranteed deduction. No one cares. No one cares. You don't need to rename it. But we'll see. So that could increase it even more. But right now, the plan is standard deduction increase. That's near 5%, the 5.4% increase as well. But on a bigger number, it's a bigger number. What are the other updates from a tax standpoint that take effect in 2024? Listed here, we've talked about it. 401k contribution limits are increasing $500 next year. Same with IRA and Roth contribution limits. Catch-up contribution limits are staying the same. Annual gift tax exclusion, so how much money can you give someone else and have it not be reported to the IRS? That's increasing from $17,000 to $18,000. Those are, you can split those gifts as well. So if you are married, you can give 18 and your spouse can give 18. If the individuals that you're gifting to, they're married, you can give 18 to each, your spouse can give 18 to each. That begins getting, to be a big number that you can shelter from your lifetime gifting exclusion. Speaking of that, the estate tax exemption amount has surpassed the $13 million threshold, going from 12.92 up to 13.6. We're careful. There's likely going to be a reset with that when everything sunsets. Congress is talking about it. We'll see if that resets down to 5 million or 3 million or something where it makes estate planning much more important to the average wealth builder. So we'll see. And then small increases there to the maximum amount that you can contribute to your HSA and your 401k. So going back to tax brackets have expanded. Does it impact your financial plan? Do you need to shift how much you're contributing in your 401k or into your Roth, whether that should be pre-tax or Roth? Does this influence your tax planning either while you're working or early into retirement? Work with your certified financial planner on that. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there as well, or send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.